Hi, I'm Seth Freudberg, and I'm the Director of Options Training here at SMBU and the head trader on SMB Capital's options trading desk here in Manhattan. So today I'd like to talk to you about options income trading and how you as an equity trader can benefit from this type of trading. Here at SMB, we issue a list of the top 10 traders for each day, and our options traders very frequently get on that top 10 list, and there's a reason why. In low movement markets, equity traders tend to struggle, and those are the exact kinds of markets that are actually very favorable for options income traders. There's a very low correlation between options income trading and day trading, so it becomes a nice diversification for your portfolio of trades. The trades that we execute on the trading desk are managed primarily outside of normal peak trading hours. So when you're day trading heavily the open and the close, that's when options traders are actually just watching and observing, and then they make their moves between those two periods of time. So this is not a form of trading that will interfere typically with your day trading. It will simply supplement it. So this is an opportunity to diversify your portfolio of trades, and I'd like to give you an example of a typical trade that would be pretty easy to understand and gives you a sense of the power of these trades. So let's take a look at Google. And what you see up in front of you now is an options chain of Google. And what I've outlined there is a potential trade that could be done in the August monthly expiration. There is Google actually trades weekly and monthly options, and many options traders focus on the monthly options expiration, which is the third Friday of each month. So let's just spend a minute reviewing what a call and a put is. A call is the right to buy a stock at a certain price, and a put is a right to sell a stock at a certain price. Now, you can be the buyer of a put or the buyer of a call, or you could be the seller of a put and the seller of a call. So if you sell a put, it means someone else has the right to require you to buy those shares at that particular price. Okay, so let's take an example of Google, which was trading at around 519 when we shot this video today. And here's a chart of Google from the last couple of years, and you can see that Google tends to not go below the 480 level. And so let's suppose that you were an investor of some sort and you owned 1,000 shares of Google, and you wanted to protect yourself against Google going below 460. So suppose that you were willing to buy a 460 put for your 1,000 shares, and that would be in the month of August. Let's say you were concerned about the month of August for some reason. So in that case, you could look up your options chain for the month of August, and you would see that that 460 put is priced at $2.03. And the put 20 points below that, the 440, is actually priced at $1 for August. Now here's a stock that hasn't been to 480 in a while and hasn't been to 460 in a very, very long time. And people are still willing to pay $2.03 for the chance that Google could get that low, and then they would be protected because they'd be able to put those 1,000 shares to the individual who wrote the put. Well, suppose you were the individual who wrote the put. Wrote it meaning you sold it. You entered into that obligation that if Google got down below 460, you would have to buy those shares at 460 from the person who bought that put. Well, if you sold 10 of those, you'd get $2.03 times 100, because everything in options is 100. You'd get $2,030 for that put. And let's say for protection, you bought the 440 put for $1. So you'd actually spend, on your 10 options contracts, you'd actually spend $1,000 for that. So the net is about $1,000. You would receive in $2,003, you'd pay out about $1,000, and you'd have a net of a little bit more than $1,000. So if you consider for a moment the chart of Google again, you'll see that it's kind of unlikely that Google will get to 460. It hasn't been there in a very, very long time. Every time it gets to 480, there's a pretty sharp bounce off of that level. So that is a very high probability trade. In fact, statistically, that trade is what they call a 9 delta trade, meaning there is less than a 10% chance that either the 460 option or the 440 option will expire with any value at all in the third Friday in August. And therefore, if that is true and Google never gets below 460, or let's say it does not close at 460 on the third Friday of August, then you get to take home that $1,000 that you originally received. The $2,000 you got minus the $1,000 you paid for your protection below the 440 level. So that is a very, very simple example of a put credit spread, a very, very high probability put credit spread. Now, could Google get to 455, for example? Of course it could, theoretically, but it looks like it's pretty unlikely, and the options market and options models are predicting that there is no more than a 10% chance that would actually occur before August. So this is an example of a very simple spread. Well, for you equity traders, this isn't a very hard trade to manage. You put this trade on it. Google is very far from that 460 level. And so you wouldn't have a lot of management to do, most likely, on this trade. And that's why this would be a great complement to equity trading that you are doing, where you are obviously much, much more active. So we've actually put together a program, and it's called Super Simple Spreads. And the Super Simple Spread program was devised by John Locke, who's actually the top trader on our options trading desk. And John has traded these strategies that he teaches in this course for over 7 years, and he has a great deal of confidence in them, as you will see if you decide to go ahead and take a serious look at this course. So we've got a series of videos and articles about the Super Simple Spreads program. If you'd like to learn more about it, then on this page there is a form that you can easily fill out, and you will get on our mailing list, and we'll begin to send you that additional information. If, on the other hand, you're so excited about this example you just want to buy, you can also do that below on this page. So I hope that you got a little bit of knowledge about how simple and powerful options trading strategies are, and I look forward to your learning more about the Super Simple Spreads program. Thanks very much.